Welcome to Aurora Insights, a thought leadership interview series that spotlights the visionaries redefining technology, innovation, and enterprise growth. In each edition, we sit down with leaders driving real-world impact through AI, data intelligence, and digital transformation. Today, we're joined by Chris Lowe, CEO of Aurora Mobile, to explore how GPTbots.ai is revolutionizing enterprise engagement worldwide. So, Chris, Aurora Mobile has gone through quite a transformation in the past couple of years. Can you walk us through how the company managed this turnaround?
Thank you for asking. That transformation was really about doubling down on what matters most to our long-term success and making tough but strategy choice to refocus. First, we streamlined our business portfolio. A couple of years ago, we were spread thin across too many areas, so we pulled back from non-core business and zero in into very high potential pillars. Our major messaging solution Engage Lab, which already has strong enterprise trust, and our new AI-driven focus with GPTbots.ai. This let us concentrate resources where we could deliver real differentiated value. Second, we lean hard into technology investment. We prioritize building solutions that solve actual enterprise pain points, like the security and collaboration feature we talked about earlier for GPTbots.ai. It wasn't just about doing AI. It was about using AI to make our existing services stronger and create new tools that enterprise actually needed. And more importantly, we made a deliberate pivot from focusing mostly on Chinese clients to expanding to our global footprint. We analyze high growth markets like Southern Asia and tailor our offering to local needs. For example, adding multi-language support for GPTbots and partnering with local telecoms in Singapore and Thailand to optimize Engage Labs performance. We also set up regional customer success teams to provide underground support, which help us build trust with international enterprise. The result in 2024, we achieved positive adjusted EBITDA, which was a milestone that reassured investors we were on a healthy track. Then in 2025, the momentum became clear. In our most recent quarter, we grew revenue by 13% year over year to RMB 89.9 million, and for the first time in company history, posted a GAAP net profit, about $500,000 RMB. That's not just a financial result, it's a proof that our strategy is working.
Yeah, absolutely. And that's just a compelling turnaround journey, streamlining your portfolio, doubling down on client-centric tech and expanding globally really paid off here, especially with that first ever GAAP net profit in 2025. So hitting that milestone is just a huge validation of the strategy you've built. And it's no doubt reassuring for both investors and your team, I know. But as we dig deeper into the financial health of the business, folks often look beyond just net profit to metrics that signal long-term stability, things that show how well the business is retaining the clients, driving that revenue growth. So my next question is, beyond the GAAP net profit and 13% year-over-year revenue growth, are there other key financial or operational metrics like customer retention rates for Engage Lab or GPTbots.ai that you can share to paint a full picture of the company's performance for us?
Absolutely. Beyond the GAAP net profit and 13% year-over-year revenue growth in our most recent quarter, there are several other metrics that showcase our company's robust performance. Our customer retention rate has been a real highlight for Engage Lab. Our global messaging solution, we have seen an impressive 19% customer retention rate over the past year. This stability in our client base is a testament to the value Engage Lab brings. Whether it is for cross-border e-commerce firms streamline their customer communication or multinational corporation coordinate internal messaging across regions. From a financial perspective, our gross margin has been consistently healthy. In Q2 2025, our gross margin was 60%, up from 65% in the same period last year. This is due to our continuous effort in cost control and optimizing our service mix. We have been able to balance investing in new technology like the expansion of our AI capabilities while maintaining profitability. Another key metric is the growth of our international business. Our overseas revenue has grown by at least 50% year over year. With the expansion of a regional data center in Singapore, in Thailand, and Tokyo, and our focus on tailoring service to local markets, we are seeing more and more international enterprise, especially in Southern Asia, adopting our Engage and Ghibli AI solution. The growth not only diversifies our revenue streams, but also validates our global expansion strategy.
Yeah, and those metrics really round out the success story there. That's not just stable performance, it's clear proof that your focus on client value and global expansion is sticking. So now that Aurora is back on stable ground with profits, growing revenue, and loyal clients, investors and partners are naturally looking ahead to what's next, right? So my question is, what should investors and partners be watching for next?
And now that we have achieved a stable footing, there are several exciting areas investor and partners should keep an eye on. The first is AI-driven expansion. Our Ghibli AI platform is at the heart of our growth strategy. We are constantly enhancing its capability. For instance, we are integrating more advanced natural language processing model to improve the accuracy of our AI agents, whether it's for customer service chatbot that can handle complex inquiry more effectively, or data analysis report that can sift through mountains of information with greater precision. We are also looking to expand the range of pre-built AI applications in our marketplace. This will enable enterprise to quickly adopt and customize AI solutions for their specific needs. The second is the global acceleration. Our overseas revenue has already seen at least 50% year-over-year growth, and we are not slowing down. We are planning to open new regional office in Southern Asia and the Middle East in the next 12 months. This office will be crucial for localization of our products further. We will be hiring local talents to better understand the unique regular environment, market needs, and customer preference in these regions. The first is the partnership-led growth. We are actively seeking strategic partnership with leading technology companies. For example, we recently partnered with Redtune Digital in Malaysia to expand our Ghibli AI presence in Southern Asia. Going forward, we are looking at potential partnership with major cloud services providers to offer our products on their platform, making it even easier for enterprise around the world to access our services. This partnership will not only drive revenue growth, but also enhance our technology capability for knowledge sharing and just joint R&D initiative. In summary, the future is bright for Aurora Mobile, and we are confident that this initiative will continue to drive value for our investors and partners alike.
Excellent. And what just an incredible transformation story, from streamlining operations and doubling down on core strengths like GPTbots.ai and Engage Lab to achieving Aurora Mobile's first ever GAAP net profit and sustained revenue growth. Chris, it's clear that focus, innovation, and global expansion have turned this company from a turnaround story into a momentum story. So thank you for walking us through Aurora Mobile's journey and what's ahead. And to our audience, thank you for joining us on Aurora Insights, where we spotlight the companies and leaders redefining what long-term growth really means. Until next time.
Thank you, Laura.